where America goes for funding for the last 2 decades, helping hundreds of thousands of people. Call or text Angelo Christian 832-431-6331. We do nationwide commercial, residential, private loans, hard money, conventional, HELOCs, ground up construction, all different types of funding. We're here as your nation's source for finance, a direct nationwide lender. Been doing this for, over 20 years. And so every Thursday at 6 p.m. Central, we do our Talk with Angelo. Got a lot of very interesting content to talk about tonight. You saw the Federal Reserve just raise interest rates. What do you do? Should you be buying a house right now? Thank you so much, Kevin, for watching the show and the channel. Appreciate that. So, this year has been very, very interesting. It started off, as a great year for the markets, great year for real estate, great year for lending, great year for, everybody. After March, though, it started to take a turn, and you've seen, this crazy change with interest rates, home prices, loan qualifications, consumer demand, everything. So, you start thinking about, you seeing interest rates now, 30-year fixed, 7-8%, and, oh, awesome. That's awesome, man. Congratulations. I'm proud of you, Kevin. Great job, man. Great job. So people start to wonder, hey, Jeff, good evening. Thank you so much for tuning in. So people start to wonder, does it make sense to buy a house? This is what I'll tell you. And I did a few videos on this. You saw Elon Musk had a post on this. A lot of people have been talking about this. So here's the thing. Look, nobody's happy about higher interest rates. I'm not happy about it. You're not happy about it. But it's the reality. It's the situation that's going on. So the thing is that if you look at wind back a year ago, okay, $500,000 house, interest rates, 4%. You had to pay $100,000 over list for that property. Versus today, you can get that house, at the asking price, probably get all closing costs paid, but you're going to pay, 7% rate. Did you know that you actually have a cheaper payment on the 7% rate and less money out of pocket versus buying the house at $100,000 over list, even if the rate's 4%? Check it out on a mortgage calculator and you'll see. So the bottom line is that, and I go through this all the time with my team, with, loan officers, the realtors, the brokers, everything, that it's just a number. What really matters in the end is that how much is your total payment, your total out of pocket. I talk about this all the time on even a HELOC program. I was doing a training today, and it's funny because like the HELOC program, if you do a comparison between the 30-year fixed mortgage at 7.5% versus the all-in-one HELOC, the all-in-one HELOC, which is very surprising, this is something probably blow your mind. The all-in-one HELOC, the interest rate's at like 8.3, but the 30-year fixed was at 7.5%. And the all-in-one HELOC will save you 12 years of making mortgage payments and reduce your interest carry cost by over $200,000. So it's not about just the interest rate, guys. It's the whole picture about what's going on. And if you look at the all-in-one, the calculator on our website, if you look at it on the YouTube videos, it shows you that you'll save more money in the long run by doing a HELOC versus a mortgage. So if you're interested to pay less for your house, you want access to funds on demand, the HELOC is the way to go. Don't be scared about higher rates. It's a reality. It's here. It's something you have to deal with. It's not the end of the world. There's ways to get around it. So I'm sorry, Juan, I missed your question. If you could please repost that. I apologize. I was, going off about this product. So, the bottom line is that I don't think what's happened right now with interest rates is going to be a long-term thing. I think it's going to be for another 6 months or so, and then it's going to, excuse me, then it's going to start to take a reversal. I understand why the Federal Reserve did what they had to do by raising rates, but it's not something that's sustained. It cannot be sustained. So why? Because you can't have rates at 7 or 8% for several years. You might be able to get away with it for about a year, But what's happened is that, and you can't escape the realities. You are pricing people out of the market. You are pricing some people out of the market. First-time buyers, low to moderate income people, they can't afford a house right now. And I don't blame them. Okay? It is what it is, and it's where we're at. And I'm not a fan of it, but I think it's something that we have to deal with. So, is there still opportunities? Absolutely, there's opportunities for investors, first-time buyers, ground-up construction, building your own home. All different types of opportunities. So don't give up. Don't lose sight. Hey, Pink Lady, how's it going? Mike is working with me. I got my pre. Oh, awesome! Congratulations. Very good. I'm proud of you. Good job. So the main thing is don't lose sight. Stay focused. What is a good down payment to get a loan? 20% down is the minimum for land. 20% down is good. We do land loans, so we can reach out to us. We can help you with the land loan. We do land loans. We do ground up construction, non-QM, bank statement, no doc, hard money, private loans, multifamily. We do all different types of funding, but 20% is good. Now remember, if you buy the land, also that the money that you use for the land loan, whenever you go to build the house, they give you all that equity. So your land is your down payment, right? So if you're putting, hey Josh, any opportunity if you have $495? Yeah, we have private note. Yeah, you could do an asset-based loan that's not credit-based. If the property is free and clear, you have a lot of equity, we could still help you. If it's not, we can look at giving you a cash out loan to 50 to 60% of the value for sure. So call or text us at 832-431-6331. We can definitely look at helping you. We do asset-based loans too. So an asset-based loan is where it's just based off of the property, the value of the property. It's not based off your credit. It's not based off your financials. Yeah, we could help you with that. Call or text us. We can help you. We do those loans all the time. And that's the cool thing about our company is that we have, a lot of different loan programs. We have asset-based loans, conventional bank loans, FHA, VA, USDA, construction, all that stuff. So there's always, the thing that's really different about us, Josh, and everyone watching is that, we're going to really try to figure out your situation to get it solved, to get you approved. Whereas I think the problem in this business is that, a lot of lenders, a lot of brokers and stuff like that, if you don't have a cookie cutter situation and it's not easy to solve and it doesn't meet their, loan guidelines, they're going to deny you. They're not going to try to figure out how to approve you. And we think differently. We want to try to figure out how do we get you approved? How do we get it done? Who's the lender out there that can make it happen? And that's really a big thing about us that we really try, how we've gotten famous, and so, because I just have a different philosophy. And some companies are different. A lot of mortgage companies, if you don't have a 750 credit, or, you don't have, you don't make $200,000 a year, then they don't talk to you. They don't return your calls. Again, obviously we like to have great credit clients too, but if you have, like, for example, your situation, you need to get, yes, thank you, Pink Lady. So, if you have a situation that, you're self-employed, you own a business, you can't show tax returns, there's loans out there for that. If you don't have a great credit score right now, it doesn't matter. We lend nationwide, Josh. We lend in all 50 states. So there are situations for, all different types of people. I'm not saying that we help everybody that calls us because we can't. There are some people's situations that are very difficult or just doesn't make sense for us, but we do try. We put forth the effort. We don't charge any upfront money. You don't pay anything to apply. So, it's not like a game where we're trying to collect your money, anything like that. We're the real deal. If you look us up on Google, look us up on our website, you go to my website, official Angelo Christian, Instagram, we have almost 75,000 followers. Our YouTube is like 68,000. I think Facebook's like 160-some thousand. So we're not doing all this to mess around and waste time and just try to pretend that we're a lender or take your money. We're here to help you to fund your loans, help you to get stuff done. We care about you. We try our best. We're not perfect, but we really do try. And I think service is a big thing with us. And we try to get your problem solved, your loan funded, whatever your situation is. We're not perfect. We're just like you. We make mistakes. We have families. We have lives, just like you guys have everything. Same thing like that. On Monday night, I was trick-or-treating with my kids. If you guys are out Monday trick-or-treating with your family, I have a family too. I have a life. So, we're real people. We're not here fooling around. We do care. We try. Sometimes, things don't always go as planned, but there's always the thing that I think what's important about us is our philosophy is we will try to always be solution oriented, solve the problem, help it to get approved, help it to get funded, show you a route, show you a way. And, 9 times out of 10, that'll work. Okay. It's not perfect. There's not a magic bullet, but, we will do our best to get it solved for you. So, that's our thing. So anyway, I hope that, that helps and makes sense. So a lot of people have been asking me, in the current market, hey, what's going on? Hey, Donald, what's up, brother? How you doing? Project Reap. What is Project Reap? Question mark. So we would love to know what Project Reap is. A lot of people have been asking me lately, should you be looking at buying a house right now? My thinking is that, again, this is where I've seen home prices have come down. It's becoming a buyer's market. Sellers are paying closing costs right now. They're paying for buying down your interest rate. If you find a great opportunity, go for it. Okay? Rates will come down again. Mark my word. You listen to this message right now. Rates will drop again. They will not stay like this forever. So if you find a great property, buy it, go with it. It depends on, the deal. If you get a good deal, you need to buy that property. I don't care where the interest rates are at. Okay? If you find the right property in the long run, you will make out because interest rates will go down, home prices will continue to rise. And it always makes more sense to own than rent, regardless. Yeah, you're right, Donald. There's always an opportunity in all this stuff. Now, I'm not saying that you just go buy whatever, but be smart. If the seller is going to pay $10,000 towards closing, he drops the price by 20 grand. Then work with the numbers. It could make sense for you. Okay, so that's what I'm talking about. So the other thing that I did want to talk about is that you heard Jerome Powell, the Federal Reserve, talk last night. 3-point rebates. Yeah, you're seeing a lot of rebates right now. You're right. So the other thing that I think it's important is Jerome Powell talked about, giving away the money. You're right. So we're open to. We don't have any restrictions on the heat and air. As long as the house is habitable, we don't care, Josh. We don't have any specific requirements on the heating or air units that y'all use. So we're okay with whatever's in the house. As long as the home is habitable and the appraiser says it's in good condition, we're okay with that. But what I was saying earlier is that you heard Jerome Powell talk about he's raising interest rates. I think it's important to do. Hey, what's up, the great one? Good to see you. Thank you so much for watching the show and the channel. Lock in the interest rate if you can before the next Federal Reserve meeting. We can help you to lock your rate in. If you want to make a loan application with us, get that rate locked in, call or text us at 832-431-6331. We can help you to get that interest rate locked in before the Federal Reserve meets. Also, important thing to know when you're making an offer on a property, a few things that you want to know. Number one, have your pre-approval. Have your pre-approval letter ready in hand. And the other thing is that on the approval letter, make sure that whatever offer that you want to make, you have that dollar amount on the approval letter. Let's say you got approved for $1 million, but the property you want to buy is $700,000. You don't want to show on the approval letter you got approved for $1 million. Because if you're offering $700K, the seller's not going to accept your offer. He sees you're approved for $1 million. Make sure your approval letter matches the offer price. All right. Make sure you have financing contingencies on the approval. Make sure you have appraisal contingencies. These are very, very important to protect you in the contract. All right? Because if something happens with the property, something happens with the loan, whatever, you can back out and get your earnest money back. Make sure you have those contingencies on your contract and on the approval. Very important. Don't run your credit after you get the loan approved. Don't let other lenders check your credit. Don't take on new credit. Don't change jobs. Don't change bank accounts. Very important things to do when buying a house, or I don't care what type of property you're making an offer. You want to keep the boat steady. Don't rock the boat. Okay. That's something I want to talk about tonight, because we get a lot of people that first-time buyers, even seasoned buyers, and they still don't know this stuff. So don't get screwed or become a victim of that. Be smart. All right. So another thing I think it's also important to know, we've been getting a lot of questions on this 2-year employment stuff and buying a property. So guys, I want to make sure everyone understands. When you're getting a loan, you do not have to be 2 years at the same job to qualify for a loan. I'm going to keep saying this forever and ever. It's 2 years total school and work history. So if you worked, let's just say you had 1 year at the college, 1 year at Domino's, 1 year at, Apple, you're good to buy a house. You don't have to be 2 years at Apple. You don't have to be 2 years at Domino's. They add it all up to school, Domino's, and Apple. You have 3 years. Okay? Let's say you worked 1 year, driving a truck for Walgreens, and then you did another year, you own your own trucking business. You still have 2 years of work history. Then you're okay to qualify to purchase a house. Okay? So you don't have to be 2 years on your own truck. You don't have to be 2 years at Walgreens truck driver. So I want to make sure, because this question comes up so much. What do you mean do the 3 years have to be in a row? No, well, it depends. I mean, what do you mean by that? Because I got to make sure I understand what you're asking me. But the reason why is that I'm bringing this up is because I probably get this question asked more than any other question about this 2-year work. No, it doesn't have to be in a row. But I'm just saying, for example, because a lot of people think that, they have to be, 2 years at this one job or they can't get a loan. And that's not the case. Well, okay, if you've been off for a year, then you have to be back to work for 6 months. Now let me make sure you understand. I'm talking about for a conventional loan. If you do an asset-based loan, it's not based on your employment or income. Asset-based loan is just off the appraisal. I'm talking about a conventional. If you try to do a conventional loan, then you have to be back to work for 6 months. And I know this stuff gets complicated because we're talking about many different loan programs here. So, if you're doing asset-based loans just based off the appraisals, your employment has nothing to do with this. But if you want to do it, okay, then you don't. For an asset-based loan, you don't have to be back to work. But a conventional loan, you have to be back to work. Okay. So, and that's the thing, is that there's so many different loan programs. There's so many requirements, and I try not to overwhelm people, get them confused. But you want to make sure that you're dealing with an expert that knows what's going on, how to qualify you, how to structure the deal, how to get it approved, do all this stuff, because it can get very complicated. So a lot of people, they have in their head that, I got to be 2 years at my job before I can buy a house. So they keep continuing to rent. It's not the case. You can buy a house if you have 2 years of total work and school history. You can get an asset-based loan if you're not working right now, you have enough assets. So, there's all these different types of situations. That's why, we need to talk to you to figure out your deal, figure out your situation, how to get you approved. So anyway, we do our show every Thursday, 6 p.m. Central. We do 3 videos a week on our YouTube. Monday, Wednesday, Friday, they come out 6 a.m. You can check us out on Instagram, official Angelo Christian, our website, YouTube, Angelo Christian. We want to help you, your source for funding. Call or text us at 832-431-6331. Wish everybody a happy Thanksgiving, a happy November. Take care. God bless. We love you. If we can help you with any funding, text us, call us, 832-431-6331. We'll see y'all next Thursday. Take care and peace out. Bye-bye.